Hello everyone, welcome to our Group 4 presentation. The first slide is our corporate profile. 7-Eleven Malaysia is the largest convenience store chain in Malaysia and it lists on Malaysia market of Bursa Malaysia. Our core business is very straightforward convenience store retailing and cooperations. The second slide shows our group structure. At the top of the parent company, 7-Eleven Malaysia Holding Berhad. Underneath it, subsidiary A as a 7-Eleven Malaysia Berhad, which management most of the store across the country. Subsidiary B represents the regional operations, such as the suburb divisions. Through this structure, the parent company full management all business units. The third slide covered our executions overview and accounting standards. Simply put, we looked at the two main standards during the executions. The first of under MFRS 10. If our company has absorbed control over instant entities, it is a subsidiary. Second, under MFRS 128, if we only have the significant influence without full control, it is associate. All of 7-Eleven past executions and the investments are categorized and the account for the based on these two standards. Let's move to the next part.
Okay, now I will discuss acquisition and subsidiary and associates by 7-Eleven Malaysia Holding Berhad. In 2025, the group acquired an additional 49.89% equal equity interest in PT Era Carrying Indonesia or ECA. Okay, now I will discuss acquisition of subsidiary and associate by 7-Eleven Malaysia Holding Berhad. In 2025, the group acquired an additional 49. Okay, now I will discuss the acquisition of subsidiary and associate by 7-Eleven Malaysia Holding Berhad. In 2025, the group acquired an additional 49.89% equally interest in PT Era Car Indonesia or ECI. The acquisition was complete on 31st July 2025 with a cash consideration of approximately 5.6 ringgit million. Before the acquisition, the group already owned 50.1% of ECA and accounted for it as a joint venture. After acquiring the additional share, the group's ownership increased to 99.99% and ECA was reclassified as a subsidiary. Next, let's analyze the acquisition based on MFRS 10 and MFRS 3. According to MFRS 10, control existing when an inventory has powered over an investee in exposed to variable return and can use the power to influence those returns. After increasing its ownership from 50.1% to 99.99%, 7-Eleven Malaysia obtained full control over ECI, therefore classifying ECI as a subsidiary inconsistent with FMRS 10. In addition, MFRS 3 requires companies to disclose information such as the acquisition date, purchase consideration, fair value of identified net assets, goodwill recognized, and gain arising from the acquisition. The disclosure were clearly present in the annual report indicating compliance with MFRS 3. In my mini conclusion, the acquisitions increased the group's ownership in ECI from 51% to 99.99%. As a result, ECI changed from a joint venture to a subsidiary because the group obtained control over the company. Overall, in conclusion, the acquisition increased the group's ownership in ECF from 50.1% to 99.99%. As a result, ECA changed from a joint venture to a subsidiary because the group obtained control over the company. Overall, the acquisition and related disclosure are comprehensive and generally complete with the requirements of MFRS 10 and MFRS 3. Thank you.
What is goodwill? Definition of goodwill. Goodwill equal to purchase price minus fair value of net identifiable assets. Goodwill meaning is arrives when a company acquires another business and pays more than the fair value of its identifiable net assets. Examples of goodwill: brand reputation, customer loyalty, strong market position, expected future profits. Goodwill in 7-Eleven Malaysia. Goodwill disclosure in annual report. Related subsidiaries. Goodwill mainly arose from the acquisition of Caring Pharmacy Group, the Field Horse Pharmacy, Valence Pharmacy. Reported goodwill. Goodwill amount is 200,702,000. Use screenshot from annual report note on intangible assets. Annual report disclosure. Goodwill recognized as an intangible asset, allocated to cash generating units, subject to annual impairment testing. Analysis, compliance analysis, MIFRS 3, business combinations, goodwill recognized after acquisition, goodwill measured as excess of purchase consideration over net identifiable assets, MIFRS 136, impairment of assets, annual impairment test performed, goodwill allocated to CGUS recoverable amount compared with carrying amount, no material goodwill impairment disclosed. To conclude, 7-Eleven Malaysia appears to comply with both MIFRS 3 and MIFRS 136 because goodwill is properly recognized, disclosed, and tested for impairment annually.
Now let's go through the intercompany and related party transactions of 7-Eleven. In 7-Eleven Malaysia, there are significant related party and intercompany transactions involving subsidiaries and other related entities. Firstly, with subsidiaries, the company recorded net advances of 46.1 million ringgit in 2025. In addition, there were interest income and interest expenses arising from these internal financing activities. The company also received 60 ringgit million dividend income in 2024 from its subsidiary. Secondly, with other related parties, the company has substantial operational transactions. For example, with U Mobile, the company recorded 150.8 million ringgit payment for mobile reload services, together with commission and advertisement income. In addition, with Razor Pay Holdings, there were very large-scale e-wallet transactions, including 5.97 billion ringgit payment value and about 1.40 billion ringgit receivable from e-wallet transactions, showing heavy reliance on digital payment platforms. Other related party transactions include rental, logistics, and consumables purchase, such as 12.6 million ringgit paid to Secure Express for logistics services. Overall, these transactions are part of the normal course of business and are recurring in nature. According to MFRS 124 related party disclosures, companies are required to disclose the nature of relationships, transaction amounts, outstanding balances, and confirm that transactions are conducted in normal course of business. In the case of 7-Eleven Malaysia, the company provides full disclosure of its subsidiaries and related parties, along with detailed transaction values such as millions and even billions of ringgit in operational flows. The transactions are clearly stated as being conducted in the normal course of business, which supports compliance with the standard. However, a limitation is that although numerical disclosure is detailed, the company provides limited explanation on pricing methodology and how arm's length pricing is ensured. In addition, high-value digital transactions, especially e-wallet flows, are not deeply discussed in terms of financial risk exposure. To conclude, 7-Eleven Malaysia demonstrates strong compliance with MFRS requirements. Firstly, the acquisition accounting is properly applied under MFRS standards. Second, goodwill is adequately and transparently disclosed. Thirdly, intercompany and related party transactions are fully disclosed with clear financial figures, including transactions involving subsidiaries, U-Mobile, and Razorpay. Overall, the financial reporting of 7-Eleven Malaysia is compliant with MFRS and provides a reasonable level of transparency to users of financial statements.
Okay, let's move to the Q&A part. Okay, question is, why did ECI change from a joint venture to a subsidiary after the acquisition? My answer is because the group obtained control over ECI, its owner. Okay, my answer is because the group obtained control over ECI, its ownership increased from 50.1% to 99.99%. So ECI changed from a joint venture to a subsidiary under MFRS 10. Okay, next question is, what is a step acquisition and why is this acquisition considered a step acquisition? My answer is a step acquisition means obtaining control through more than one transaction. 7-Eleven Malaysia first owned 50.1% of ECA and later acquired another 49 and 89% because control was obtained gradually. This transaction is considered a step acquisition under MFRS 3.
Q&A. Why is goodwill not amortized under MFRS? The answer is goodwill is not amortized because it has an indefinite useful life and its value does not decrease in a predictable way. Instead, according to MFRS 136, goodwill must be tested for impairment at least once a year to ensure that its carrying amount does not exceed its recoverable amount. How does 7-Eleven Malaysia comply with MFRS 136 regarding goodwill? The answer is 7-Eleven Malaysia complies with MFRS 136 by allocating goodwill to cash generating units and conducting annual impairment tests. The company compares the recoverable amount of the CGUs with their carrying amount and discloses the results in its annual report.
Question 4. Why are related party transactions important in financial reporting? The answer is because they may affect the fairness and transparency of financial statements. Under MFRS 124, companies must disclose these transactions to ensure that users of financial statements understand whether the transactions are conducted at arm's length basis and not influenced by control or relationships within the group. In the case of 7-Eleven Malaysia, although large transactions exist with subsidiaries and related companies, the company discloses them clearly in the financial statement, which helps users assess the level of transparency and potential risk.
This is question 5. How we determine whether 7-Eleven have control or significant influence over the acquired company. The answer is control. 7-Eleven hold more than 50% share or major broad control. It must fully consolidated. The significant influence is the 7-Eleven hold 20% to 50% share without control. It is accounted to using equity method. That's all for our group presentation. Thank you for your watching.